analysis using price action, and my name remains Tunmise Olaoluwa. A quick disclaimer: any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to any presentation is provided as a general market commentary and do not constitute any investment advice. Please do note that. All right, a quick about on myself. So I have 7 years of trading experience with a solid background in finance and quantitative research. My trading result has been consistently profitable across various strategies. I frequently trade price action, momentum, trend, candlestick patterns, and I primarily focus on EURUSD, GBP USD, and USD JPY pairs. Okay, into this agenda, we're going to look into a top to bottom strategy on how to trade, okay, and then we're going to review EURUSD as a sample pair and also watch out the price movement on EURUSD. Also, of course, I'll give an opportunity for the listeners to give suggestions on which currency should we analyze, so you can drop the currency prior to the time when I would ask for which currency should be analyzed. All right, so this session is going to take 45 minutes, and you can always use the live chat to ask your questions during the course of the webinar. So our strategy is going to be focused on analyzing historical price movement, utilizing candlestick formation, chart patterns, and market structures. And the trading strategy is suitable for position traders, intraday traders, and swing traders. All right, so when do you use this strategy? It can be used during high liquidity period and also within the time frame from 1 hour to 1 month time frame. Now let's go to our live trade session. Okay, so today we are looking at EURUSD. For many of us who followed my analysis on EURUSD, there is something I will just reiterate, so that we could have that background understanding before diving deeper into the analysis. So on EURUSD last week, we saw that let's start. We are doing a top to bottom approach, right? So this is the okay, now, so we can see level where price has not been to in a very long time. All right, and we can also see that price has actually been ranging, from this level here. Price has been ranging, within this box. When we look back historically, we can see that similar movement has been done before. We can see that happen here. Okay, and equally we can see that. Okay, sorry, let me pick this. We can see that happen here. Okay, so now what would determine the next price movement would be a breakout from this level or a rejection from that level. All right, now, so here is something I want us to see. This is a monthly time frame, right? And we can all see that EURUSD has been on a downtrend for a long time. All right, so when we look at this from here, you can see that EURUSD has been on a downtrend for a long time. So let me just okay, cool. Okay, let's do this. All right, good. So you can see that EURUSD has been on a downtrend for a long time. So now okay, we can also see that there's a channel here. So okay, all right, good. So we can equally see a level here where price previously touched before pushing back up into this ranging market. So of course we can see that market has been in a general downtrend, all right, and then we can see that it has been ranging between these box. Okay, now one interesting thing I would like to show us is on this weekly time frame. Now equally we can look at the room to the left. All right, maybe I should make this more transparent. So okay, good. So when we look at the room to the left here, all right, we can see that. Let me see if I can have something to illustrate it, because I would really want us to catch the knowledge of what I'm sharing. Okay, let me see. I can use this. All right, so you can see that this gap here, okay, shows that price has not gotten to this level in a long time. Okay, and when we count the number of candles to the left before this one that came to touch this level, this all-time high here, now we can count that. Let me zoom in. Okay, good. So what we are looking at here is how many candles before this green candle that got to this all-time high at 1.12. all right, how many candles? So we do 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 21 22 23 24 25 26 27 28 29, 30, 31, 32, 33, 34. Now we can see that it took 34 candles on the weekly time frame, okay, and none of the 34 candles touched the all-time high except the 35th candle. All right, now, and when we look at it now, this, in fact, this level where it got to was only previously attained, in July 2023. All right, in July 2023. Okay, now after which, from July 2023 up until August 2024, that level had not been touched. Okay, now there is something I want you to note down. Maybe you just write it down. Okay, if price gets to a level where it has not gotten to before, and when you look at the room to the left, you can see that in the last 12 candles, on the higher time frame now have not gotten to that all-time high before. Okay, if the last 12 candles have not gotten to that all-time high before, there is bound to be a rejection from that level. There is what? Bound to be a rejection from that level. I explained this, but I didn't lay emphasis on it in our last session. All right. However, now if you want to look at it, you see that, look at how price moved from here. Okay, so here we have price breaking out. This is the weekly time frame, right? We have price breaking downwards, okay, breaking out downwards, all right, going down, and then price came up here. Now when you look at the gap from this place, okay, when you look at the gap, all right, from here to here, and you count the number of, there is a higher chance, and the probability of a reversal is higher when the last 12 candles have not gotten to that level where the current candle got to. So when the current candle, price gets to a level that the last 12 candles on a higher time frame like daily, weekly, monthly have not gotten to, there is bound to be a reversal. Okay, now you look at this. Now imagine, even as bullish as this candlestick was, okay, with little to no wick to the upside and to the downside, you can see the bears pulling back, okay, because this level where it entered here is like the overbought region, okay, overbought region. And then sellers who have made profit enough, institutions who have made profit enough, started selling, and then they sold their way down. Can you see that? Okay, they sold their way down. And when you look at what now happened next again, when price got to that same level, when you look at the left, there was no room in the room to the left. The last 12 candles had never gotten to that current all-time high where this price has gotten to. So a pullback or a retest or a reversal is expected. Okay, is expected. Now, and that is what we see playing out here on EURUSD on the weekly time frame. Okay, of which I had already started shorting EURUSD when it started creating a new all-time high. Because when I looked at the room to the left, obviously there was no candle that has gotten to that same level in the last 12 candles on the daily time frame. Hence, I began shorting from there. So that is another price action strategy that you can incorporate into your trading setup. Okay, good. Now let's go down to the daily time frame. Okay, good. Yeah, someone said happy to see you again. Thank you very much. I'm glad you've been following for a while now. Good to have you here. So when you look closely at this, you can see that what played out here is most likely going to play out here. Why? Because this was a level, the first time price got to this last 12 candle. Okay, and after this time, we see that several candles of several days, over 30 to 40 days, have passed without touching that level. Okay, and now in recent time we saw that price has now risen and now touched that level. Now, what are we anticipating from this? Okay, what are we anticipating from this? We are anticipating a replica of this move based on price action. Okay, based on price action. All right. However, now we need to put into consideration levels of supports and resistance that have been created along price movement. Okay, so this is the daily time frame. Now let's get minor levels of support and resistance that would be respected when price gets to that level. So a key support level is here, because if you look closely and observe, you will discover that price actually broke out of this level to trade this higher. Okay, because you see that price had a first touch here. Let me get my pen. Price had a first touch here, nothing happened. Second touch, nothing happened. Third touch, nothing happened. And then the fourth touch, something happened, and that led to a breakout. Okay, now so when this has happened now, we would see price coming back to retest this resistance turned support zone. We would see price coming back to retest this resistance turned support zone, of which we can obviously see what price is doing now. So in just 2 days, we've seen the area price has covered. So I'm expecting that in the next few days, today being Thursday, tomorrow, then in the next few, next week, if not this week, next week, we might see price touching as far down as this support level, that was previously a resistance zone, but now would be acting as a support. Okay, after which, price can then decide based on any macroeconomic factors, price can then, push back up or break down further. And if there's a breakdown through this support zone, we might see price, coming as low as, this level. All right. So let me just take this, this off so we can see clearly. Okay. Now I hope this is clear. Okay. So this is it. All right. If you have any question, please do well to drop it in the in the chat box. So when we go down to the 4 hours time frame, because the lower we go into these time frames, the broader, the clearer we are able to see what is actually going on. All right. So obviously from here now we can see that price still has a lot of rundown to do. Okay, from this level. Yeah. Okay. Price still has a lot of rundown to do. But not a lot of rundown, okay, that can be done in a day or two. Alright? Good. If you have any question, please do well to drop it in the chat box. If you have any question, please do well to drop it in the chat box. Now let's zoom in. Let's see what the current price is saying. Okay, so yeah, so we can see here, okay, that at this level here now we can say that we would continue to see a further drop in price. We're going to see a further drop in price. So observe with me. Now you notice that this level here is a key support zone. All right, a key support zone, because how do we identify that as a key support zone? So when you see this, you can see that there was a touch here. Okay, price bounced back. Another touch here, price bounced back. Another touch here, price bounced back. And the fourth touch, what happened? A breakout actually happened. Okay, now we can see that there is now a breakout of this support zone. This support zone here on this 4 hours time frame would now be acting as a resistance zone, because when price now pushes up here, okay, and then continues to fall, okay, up until this next support zone, So if there are no pullbacks upwards, then price will continue to fall from this level. And it's that simple. All right, it's that simple, but not that simple. However, because you need to use your risk management, in order to prevent losses, should the market go against your current strategy. All right, so nothing is absolute in the market, so you have to be mindful of risk management, which is very, very important for every trader to consider. All right, good. So as regards EURUSD, I'm bearish. Okay, as regards EURUSD, I'm bearish on EURUSD. Okay, bearish on EURUSD. Okay, on EURUSD. Awesome. Are we good? Awesome. Now let's go down to the 1 hour time frame. Good. So you can see that on the 1 hour time frame here, of course, we've mapped out that we've broken out from a major resistance zone, a major support zone, which would now act as a resistance zone, because when price pushed back up, All right, let me take this out to recreate this. Okay, so because when price pushed back up, okay, this level now would now act as a resistance zone, okay, of which price will now what? Continue to drop. Okay, this is you know, how do I put it now, what would most likely happen. All right, bear in mind that risk management is a very big factor, so you have to put in your exit level and in accordance to the number of risk that you are willing to take. All right, so we would round it up on EURUSD here. I see a lot of persons have called for the analysis on gold, so let's go straight to gold and have a deep dive. Good. So here is gold, and let's go to the 1 hour because we are carrying out a top to bottom approach. A top to bottom approach. Okay. Good. So let me, okay, pardon me. So here is something I did on gold. I would just want to just use this to carry on the explanation. Okay. So here is the monthly time frame on gold, right? And we can see that on gold started its movements, you know, at this level. Okay, so started a movement, you know, let's say from this level. Now I'm watching it from this level, and gold was ranging in between this you know, box. Of course, touched the resistance zone, moved back, went back to touch the resistance zone again, moved back, went back up to touch the resistance zone again and was rejected, and the fourth time there was a breakout. Okay, now this breakout now saw a very drastic movement on gold. We see gold push up outside this level, got to an all-time high at 1,200. Okay, sorry, 2,200. Okay, now went as high as 2,400, and what do we see after going as high as 2,400? It pulled back. Let me take this 2 off. Okay, so you can see went as high as what? 2,400. Why did it go as high as 2,400? Because why did it go as high as 2,400 and comes back? Okay, it's because when you look at the room to the left, okay, no candle, price has never gotten there before. Price had never gotten there before. On the 2 occasions, on April and in May, got to 2,400 and reversed back. Because when we go down to the weekly time frame now, it will be more clear to us why this happened. Okay, so you can see it here. All right, so here price came up, was rejected, went up again, was rejected at that same level. Okay, and we see price started building momentum. You know, price started building momentum at this level. Okay, and then after which a breakout occurred. Okay, a breakout occurred. A breakout occurred outside this level, and now we now have a new all-time high on gold after the consistent rally between gold from the 2,400 price mark and the 2,200 price mark. the 2002, 280, price mark, and then a breakout occurred, and here we can see the breakout. Now this is a weekly. The next candle that showed some level of rejection to the upside and to the downside. Now this level of rejection here, on the lower time frame, now we would see that price actually more like retest. Okay, there was a temporary retest in price before this pump that we are seeing here now. Okay, so for gold now, gold is also being fundamentally driven, okay, based on the macroeconomic environment. All right, so it is interesting to note that to let you know that when trading gold, you also need to be conversant of macroeconomic environment that influences the gold market. Okay, now this macroeconomic environment that influences the gold market, all right, gives us an indication that in recent times we are in an inflationary environment where the economy of the world, the US, is in a state of recession due to high inflation. Okay, now there is also an expectation of the Fed by analysts to cut interest rate. Now cutting interest rate would increase the gains of risky assets. Okay, risky assets like gold, like stocks, like cryptocurrency. Okay, so in these times where we have expectations of rate cuts, okay, we have the reality of an inflationary environment, the reality of the looming recession in the US, okay, which is impacting heavily on the global, which is the USD. Definitely we would see more interest in gold, because gold has historically acted as a safe haven for investors. All right, so outside of technical dynamics or price actions, all right, fundamentally gold is driven by the macroeconomic environment, and we might just be in the beginning of the all-time high on gold. All right, as it stands, with this move, gold is eyeing $3,000 here. Okay, with this move coming in, gold is eyeing $3,000. All right, that's it. Gold is eyeing $3,000. Now we can see that a breakout has occurred, a little reversal has happened, and then we can see price moving up. All right, so we might see a more push in the price of gold, a higher push in the price of gold in the coming week and in the coming month. Now let's go down to the daily time frame. Good, very interesting, because definitely you see that getting into gold, we are still very much early getting into gold now, because when you look at it now, price had freshly just broke out, struggled with a pullback and a retest at this level. So you can see here, apparently price, this is a major breakout here. The breakout happened, then price retested, and now you see price going up. All right, and this looks like a preliminary to what is coming up on gold. Okay, so we can, and then the final breakout had occurred. And what do we expect from gold now? We expect that gold would fly. Okay, that's the expectation on gold. All right, that's the expectation on gold. Any question before we round up? So yeah, we would be going down to the 4 hours time frame. Good. So because on the 4 hours time frame, we get to see more clearly and closely at what price is doing. Okay, high is a bullish momentum, okay, that gives price, that shows price, moving, moving higher, creating a new high from the previous high. So here's what we're going to do. Okay, I'm zooming in. Awesome. Okay, so now look closely at what we have here. So we can see what we have here. Okay, good. So price creating, so that means higher high. This is a new high, a new high. We have an high here. We have another new high here, of course, and here's another resistance level that has been holding, gold from pushing up. All right. Now, what we would see on gold once a breakout of this region happens. So once a breakout happens at this level here, a pullback follows, and then gold moves, of course, straight to say 2,600 USD. All right. So, and that's it. Okay, that's it. That's the outlook that I have on gold. All right. The gold is eyeing 3,000 USD. Okay. However, what we might see here at first is a move to 2,600. A few rally, and then a continuous push in price. Someone said, how can a trader that uses stop order avoid slippage? Okay. So, okay. So, here now we might expect a breakout of this level, a retest, and then a continuous push up in price. Okay. So, in this case of slippage, you might also want to be conscious of your spread level. Okay. So, and I'm not sure I've had that experience, while using Octa FX. Okay. But then you also just need to, watch the levels where you use for your stop loss, right? So for me now, stop loss is discretionary, and I use the next support and resistance level as my stop loss zone. Okay, I use the next support. So if I'm buying here now, so, and I'm looking at a target of 2,600, then 2,400 here would be my stop loss level. So something like this. Let's say something like this. If my target level is this, okay, then my stop loss will be here, and this is the next support zone. That's how I set my stop loss. Okay. So, but you can always, there are different ways to set stop loss. So this is just a typical way of how I set my stop loss. All right. So done with the live trading session. A quick information before we call it a wrap. Okay, so I'm sure you had a great time learning. So there's what we call risk management, which I'm introducing to you now. It's important that before implementing your strategy on a live account, you implement your strategy on a demo account to see and understand the strategy. Okay. Also, make sure you are using a stop loss order. This is very important. It limits your potential losses on every trade. Okay. Number 3, trade with risk management. Trade with risk to reward ratio. So of course you want to trade 1 ratio 2 risk to reward ratio. All right. So which means you aim to gain twice as much as you are willing to lose. Okay. And also you need to risk only a small percentage per trade. So don't risk, if you are taking 20% trade, don't risk all the 20% on a single trade. You can split them. All right. Also, we encourage you to diversify your trade. So avoid putting all your eggs in one basket. All right. So that's also very important. Like putting first trade, you eat, take profit. You took your second trade, it eats, take profit. You took your third trade, it eats, take profit. Then you now doubled your lot size to take another trade again. Then both your profit and your capital now hits stop loss and everything got burnt. That's over trading. All right. Learn to know when to cut, when to call it a day. All right. So lastly, review and adjust your strategy regularly. This is very, very important. As traders, you have to review and adjust your strategy regularly. All right. So at this point here, I want to encourage you to take an advantage of the Octa trading app that has been provided for you on your Google Play Store and also on your Apple Play Store. This app is available for you for free, and you can trade different instruments with low spread, fast execution, and zero commission. That's a rare giveaway. A rare giveaway. Now it has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. All right, here is another giveaway for you, for you to double your deposit, and there are only 5 steps for you to take. Nothing much, nothing more than that. Number 1, you open your Octa trading app or visit our official website. Go to your profile, find your promo code section in the menu, enter the promo code and press activate. Make a deposit and enjoy your deposit. Promo code is Tunmise 100, TUNMISE then 100. All right. So this is an opportunity for you to take advantage of. I'm sure you enjoyed this session as we have looked into price action. We've also carried out a live trading session, and I look to seeing you becoming profitable. One last time, do well to tap on the subscription button and smash the notification bell to be the first to be notified whenever we are having a session. All right. If you have any valuable feedback for us, there is a QR code on the screen. Please scan it and fill the feedback form. It's just 1 minute. This feedback is going to help us to improve better in our future webinars. Thank you for joining.